Hey guys, Rob Mitchell here, market mapping video series number 6. What do market extremes look like? And this one's going to be on Ultramap applications. Yeah, first off, past performance is not necessarily indicative of future results. There's a risk of loss trading futures. Don't use the grocery money for trading. What do market extremes look like on the Ultramap? I'm going to pull over. Let's do this one for the gold market. Yeah. I've reiterated this in each of the videos. Market mapping is about knowing what normal is or not, so you can tell what kind of trading environment you're in, so you can make better trading decisions. Different market environments work better with different kinds of strategies. This is a ultra map for the gold market, and these are the periods of the day, the 30-minute periods of the day. And we can see on here that as you go out from the A period, the first period of the day, out as you go out here, you start getting, by the time you get to F period, about 9 o'clock exchange time, you're looking at about 10% for that to be the other extreme from A period. But what else is interesting is that also for G, H, and I is actually 100%. There are 0 times that the I period ever gets to the other side of A period. Yeah, so from A to I is 0. And then when you look at these, what you're really doing is you're taking the 100 less than that. Yeah, so like when you see A, B, C, it's 80%. A is the first extreme and C is the second extreme. It can take a little bit to wrap your brain around this. Yeah, these kinds of ideas is thinking of the market in terms of extremes. But if you get nothing else out of this video, being aware of how extremes get made can be a big game changer for you as a trader. Yeah. So what you see here is you see these guys reaching down. So when I see the orange over here, just like generally looking at the map, this is for Monday. What that ends up looking like on the chart is you go A, B, C, and then the probabilities drop off, and by the time you get to F and beyond, you don't get anything. So this is gold for Monday, and you see the A, the B, the C. D happens to make the extreme, and then you just get this consolidation inside here. It doesn't really go anywhere. You get that first, we call it a walk, when we see that A, B, C, D on there. And then by the time you drop below 50, you become random. And then when you get over in here, this is 10%, 20%, etc. that we just covered. So you get over here into F, and so you shouldn't be too surprised when you see these guys consolidating inside this prior range. It doesn't make new extremes afterwards. Doesn't mean that it won't. That's just what it is. Let's go look at this for the next day out, for Tuesday. Just crunch that up a little bit and I'll take a look at Tuesday for the day. That gets a nice view of Tuesday on the screen. We'll go over to Tuesday here and we'll draw this across. And for this Tuesday, from A period, the beginning of the day, we see it goes A, B, C again, but then we see that it drops off by the time you get over here, I, J, K, L, etc. Let's see how that worked out. On this particular day, it did make some extremes out in here. You got your initial walk, your ABC walk, extreme A to C, extreme C to D at 90, C to D at 90, C, let me double check that one. C, D, E at 90. That's a pretty low number in the middle. So qualitatively, I look at that as a little lower. C, D, E, C, D, and then E makes that extreme down here. In other words, it's predicting that E period is going to take out the C, D range. It was interesting the way that played it, yeah. the cool thing is that you can kind of know that these are the things that the market wants to do. And by the time it got over here, you knew that that was improbable. Do we see any other walks on here for the day? No, not really. I don't use them for 70. I personally only use them at 80 or higher. So when I see that 90, the CDE, and so just at a glance, I see in my mind's eye, I see a walk there. I call it a walk when we get three of them or more. And then I come down and where's the next one? There was another one here. Yeah, the CDE one that we just did. Yeah. And so just in broad stroke terms, I can see that the market tends to make its extremes and then it doesn't make extremes over in here, and it historically fails to make extremes over in here. On this particular day, it did get out that high over in here, not by a whole heck of a lot. Yeah, so let's look at the next day. This would be the Wednesday. Pull this over for Wednesday. And what we see from, and you could do this from any of the extremes. We're just doing this from A period or on the walks I'm showing to you. But notice how A period, F period is never the extreme to A period. I'm not really getting any walks in here of any particularly high number. And so I just glance out and I'm wondering, well, what does that look like? Well, what happens on this particular day is you get A, B, and the rest of the stuff trades inside. Trades inside. A, B, and then these guys don't make extremes. That's exactly what it's predicting. It's kind of quasi-random, and then F period doesn't make anything. How about I period? I could even look at it from the interval D or E to I period. See what happens for that guy. D or E to I period. And that is statistically abnormal for it to do that. Yeah. So you know that you're in an abnormal environment when it's doing that. And so you'll also expect to see, this is interesting here, sitting down underneath these low probabilities from here, you get this walk out to K period from G in general, G, H, or I, 80% to K period. Let's see how that one played. And I think you're getting the idea. Yeah. G, H, and I. Yeah. G, H, and I. And K period, this smart periods is plotting these 30-minute periods on this chart here on these boxes for us so that we can see the different periods. But it looks like K period was kind of quiet, so you can't see it on there. So, and that's how you look at it. Let's do one more. This is for, well, actually, I don't think I can do it for this one because this is Thursday. Let's go back a week before. Let me see what Thursday would have been for that. I think it would have been the 24th. 24th. And there's the day for the 24th. This was kind of interesting because from A period gets real quiet, or even expecting a reversal at around F. And so what you got on this day is go A, B, C, D, and then the rest of the day trades inside that. And so the map just at a glance kind of gives you A, B, C, D, and then you get stuck inside. How about this walk over in here? How about the GHI walk at 90%? Let's see if we got that guy. GHI. See, so it's telling you what's expected, and if you're not making those, as we say right here, market mapping is about knowing what's normal or not, so you can tell what kind of trading environment you're in and make better trading decisions. And so that's really the whole thing. But the idea that I'm doing on this one is kind of different than the other ones because I'm showing you how to look at the ultra map in this particular case just in broad stroke terms, just at a global kind of a look, not specific. Yeah, we did look at some of the walks, the X to the probability going out to the next extreme, but just as a just kind of broad stroke looking at the map globally, so you can see, well, what's the general theme here? Yeah, because when you see those red or orange areas reaching down inside, it means typically means either you're going to have a reversal or you're going to get consolidation. Yeah, so all right, guys, thanks for joining me on this one. I hope this was helpful for you. Yeah, market extremes. Yeah, always test before you trade and trade the way you test. You can subscribe to these market maps at indicatorsmart.com/market mapping. And I teach mapping every day in my trading room, the oil trading room. We use oil because it's statistically consistent. It's the patterns are clear in there, although you can see they're super clear in gold. Yeah. And but my trading room is kind of wrapped around these mapping concepts. I also use the maps over in the stock index trading rooms. So each of those includes the maps for that particular market. And so if you wanted to just kind of learn market mapping, that would be another way you could do it. Yeah, that's what I got for you today on this one, guys. Thank you. And we'll see you again on the next one.